I'm Gary Venner, CEO of IFA Acquisitions, and I'm joined by Alex Canham, who's partner of Herrington Carmichael, where we continue our second informative question and answer series under our YouTube channel to provide top tips and market update when selling an IFA business and an insight into the legal processes when buying or selling an IFA business by two industry experts. The title of this mini video is coming up on screen now. So Alex, we've known that the FCA have always had to approve a change in control of a directly authorised business being acquired, but we're now finding that the FCA need to be involved in the approval of other firms as well. So can you tell me more about that?
That's right, Gary. Directly authorised businesses have always needed to be approved when there's a change of ownership. More recently, we've seen changes to the rules around asset purchases and where client books are being acquired too. The FCA realised that there was a bit of a gap in terms of the protections and oversight they had there, and as a result of people transferring books of business and then leaving the former sort of limited companies or the liabilities behind with the seller, it was a bit of an unsatisfactory outcome from a regulatory perspective. So in December 2023, the FCA published some guidance around what they expected to happen in that scenario.
Was that SUP 15, if I remember?
That's right, yeah. So the SUP 15 is a general notification, and that's actually been in place for some time, but it's not really been used in the context of acquisitions and disposals. Now what the FCA are requiring is the sellers to notify them when they're anticipating doing a sale of a material part of their business, which is going to include their client book.
So I'm assuming that whose responsibility is that to make sure those notifications get done? Is that the acquirer or the vendor or both?
I'd say it's both in the main. The obligation initially sits on the sellers to notify the FCA, but best practice at the moment is for the buyers to also make an application to say they're acquiring a client book and explaining sort of how that's going to plug into their business. From the FCA's perspective, they want to know who's buying, who's selling, what the motivations are, and ultimately have a bit more visibility on what the seller plans to do with any historical liabilities or advice risk that might sit with them.
So from our experience as a broker, we're not finding that the FCA are putting in objections to these deals. What are you finding as a lawyer in this field?
Similar experience. We've not seen any objections on the transactions that we've been involved in. What we have seen is the FCA being a lot more discerning and sort of observant in the process, and generally wanting to understand that there is a genuine commercial reason for why the transaction is taking place,
yes,
that the parties are unconnected and that the deal is taking place on arm's length terms, and importantly that the sellers are making adequate steps to either keep funds in reserve to deal with any potential complaints and liabilities, or that they've got an adequate policy of PI runoff.
Fantastic. And on DB pension transfers, the hot potato, I suppose, less so, I would say, now than it was, and that's partly probably because of interest rates increasing and things, and less likely to raise complaints and compensation. But are you finding that slows the process down as well, if there are DB risk?
Not significantly, but it's certainly an area the FCA are going to be looking at, and where we have had clients that have got an exposure to DB transfers, they've certainly used that as one of the sort of focal points of their review. It's often a scale thing, so where we've seen firms that have one or two, then actually the FCA we haven't seen raise any issues. Similarly, if they had sort of 15, 20, 30 or 40, and there was a concentration risk potentially with those, then they're more likely to take a sort of deeper dive into the facts and background.
Yeah, and I often find that the PI renewal documentation is really good here, because it's all documented, isn't it, for the PI company, and generally that sort of covers the risk a lot as well.
That's right. The information that they've already been submitting to the regulator is sort of used as a bit of a cross-check for them there to try and understand that. Certainly as far as the kind of data and the number of DBs concerned isn't always the determining factor. It's often about whether they are some of the more political sort of transfers, such as British Steel, or also whether there's been any issues with complaints history too.
Yeah, and of course, as you said, like the reg data reports that regularly go in, it's not new to the FCA about how that business has been run. timescales. I mean, we're finding record timescales now with the FCA turning around these applications. You know, we used to find that it was nearly at 3 months before a case handler was appointed, but much quicker. How are you finding this?
Yeah, I mean it's a breath of fresh air recently by comparison to the position a couple of years ago. Typically for sort of applications for directly authorised businesses, I think sort of 3 months is probably still a good yardstick that I tell clients, more to manage expectations, but actually we're seeing them come back a lot quicker now, particularly where you've got acquirers who are known to the FCA and they're acquiring on a kind of consistent acquisition model that follows the same funding model and the same acquisition structure as they previously approved. On the sort of asset acquisitions and this new sub-15 process we talked about, in that scenario, really, we're seeing it being sort of 3 to 4 weeks on the transactions that we've been involved in. So, not.
Well, our quickest is around 2 to 3 weeks, which is incredible. And actually, it was so quick. They were almost ready with the funding drawdowns because they had to give the notice, etc., and into the contract. So I think it's bear that in mind as well.
And that's the thing, we see it then feed into the acquisition structures too. So we often say to people, get those applications in early in the process, because even though there is a degree of paperwork to be done, it doesn't commit anybody to the transaction. So if the FCA are in a position where they can approve it really quickly within a case of weeks or a month or two, actually by the time you've got the rest of the transaction documents ready, you're then able to move forwards at your own pace.
Absolutely right. Yeah, I totally agree with that. And it obviously gives a 3 month window, doesn't it, from that approval. And actually we've been involved in some where it had to be extended as well, and maybe just a week or two beyond the original expiry date, but a very easy process as well. You know, getting hold of the case handler, more than happy to extend as well. So I think we're seeing really good signs there with the FCA of being available to approve these transactions.
Definitely. They've been a lot more engaging and sort of collaborative, I guess, in the way that they've approached the transactions, whilst they still ask the right questions, I think, in my mind, to make sure that people are taking control of these firms, are fit and proper, and they meet the required standard we would expect for a regulated business. They are being a lot more sort of open with their questions. They're being a lot more pragmatic, I think, with the information they're then getting. So when we have seen questions raised, actually we've found it more sort of constructive than perhaps it has been in years gone by.
Yeah, Grace. Subscribe to our YouTube channel and switch on notifications so that you won't miss our next video in the series of top tips and market update when buying or selling an IFA business, and an insight to the legal processes by 2 industry experts, me, Gary Venner, CEO of one of the UK's largest specialist brokers in IFA Acquisitions, and Alex Canham, partner from Herrington Carmichael, who are leading commercial lawyers specialising in IFA mergers and acquisitions.